JOLTS data this morning giving us a clear picture of the labor market ahead of Friday's big jobs report. Openings were little changed, nudging slightly down to the lowest level since March 2021 in a signal of ongoing but moderate cooling. And so that was really the signal here, Julie. So U.S. job openings in November kind of lower than where the street was at. 8.79 million jobs open. Street was closer to around 8.82 million. And the quits rate, which economists will look to as sort of a leading indicator of labor market momentum, that fell to 2.2%. So big picture, more signs of cooling in the labor market. And of course, we get the government's big jobs report on Friday. The expectation there, that's going to be 170,000 positions economists think were added in December.
Yeah, and so softening but not, grounding to a halt was kind of the vibe that I got from the economic commentary that I was reading from the various analysts out there. So cracks, as you said, cracks appearing in the jobs market, but nothing that is alarming to folks. Chris Rupke over at Forward Bonds, the chief economist there, saying net, the labor market looks to be coming in for a soft landing, job openings on a downward trajectory. He said it's sure to please Fed officials as they plot their course on interest rates this year. Mike Jarda over at Rothchem MKM, he's been a little bit more cautious and bearish. He says that basically JOLTS data, even though it's for November, even though it's a lagging data point, can actually be a leading indicator. And so he says it is something to watch here. The labor market should continue to cool here. And he said the neutral policy rate should decline in sympathy.
And cooling here, I mean, if you're Jay Powell in the Fed, that's what you want to see. Cooling, not crashing, but cooling.
Right.
Because, of course, you want to see that kind of limit on wage pressure and slowing inflation. So this is what the Fed would like to see in the labor market. They of course, still hopeful they can kind of hit that rare, tricky, soft landing, bring inflation back to 2% without a downturn and surging unemployment.
Yeah, and I know we're going to talk about the Federal Reserve minutes from their last meeting in just a minute, but I did want to zero in on something here from the minutes. A few Fed officials said they felt the Fed was approaching a point where the central bank may face a trade-off between its dual goals of controlling inflation and maintaining high rates of employment. And this is something that investors have been talking about for 2024. Is the focus going to be turning more to jobs, right? And we've had a few investors, economists on recently, Torsten Slok of Apollo yesterday among them, who said the inflation fight isn't done yet. So I wonder yet if we will, I mean, people are always going to pay attention to the jobs data, but I wonder if the focus will more exclusively shift now or if it's going to be a little further into the year.
Yeah, the chat with Torsten was fascinating because he did talk about those upside risks to inflation, mentioned the housing recovery, right? Yep.